Well, welcome to the conference room. This is Navin Prithyani. I am the analyst for forexwatchers.com. Also run urbanforex.com, and very thankful for FXStreet to have me here again to present to you guys today's topic, which is hunting your stops is in my best interest. This is more of a psychology and money management webinar put together. So in today's webinar, I'm not going to be discussing any types of strategies or anything like that. It's more of the mindset, okay, the mind of the trader, basically. Okay, so let's get started here. Let's not waste time. We have approximately 40 to 45 minutes, and let's get straight into it. So let's take a look now. Whenever we see a certain scenario when we're trading, right? For example, if you're getting ready to set up a buy or a sell, there's a couple of things you're looking at. For example, in this particular case, when you see something like this and you're like, okay, well, I'm going to buy. Okay, and you enter in your buy somewhere around here. Okay, and then you enter your buy somewhere around here. Where would the average person put his stop? Okay, I'm going to ask you guys, where do you think the average person puts his stop? Okay, under the wick. There you go, under the wick. Below the low. Okay, so now watch how when I asked you guys this question, everyone started up and they knew the answer. Why is that? Okay, because this is the trend that is taught. I always say this in my webinars: is if you want to stay ahead in trading, you don't need a special system, a special software, a special guidance, a special guru or mentor. None of that's needed. Only thing you need to know is what does the rest of the world know? How are they trading? And how do I get in on the other side? Okay? Because for me to make money, somebody else has to lose money. Okay? Whenever I make money, the bank won't print special notes for me. It's coming out of someone else's pocket, which means the other person has to lose. It's in my best interest for the other person to lose for me to make that money. Okay, so always remember that concept. That is the generalized idea of the 95% against the 5%, or even less now, probably 98% against the 2%. Okay, it's not the unique strategy or the trading system or all that nonsense that's being taught online. It's the simple fact that keep up with the trend. What's the trend right now? What, price action, supply and demand, support and resistance? Okay, keep up with it. Find out what's hot in the market, the general stuff, and then if you know, for example, if you're selling here, you're like, okay, the market's gone too high, you know, it cannot go any further. Look at all these wicks popping up. You sell and you keep your stops above this wick. Well, the market did go down, but after it took you out. Okay? What are you going to do? Keep no stops? Okay? So always have this in mind that hunting your stops, whether it's a broker or anybody, it's in their best interest. So sitting here and crying about it or screaming and complaining, writing letters to the NFA, whatever you're doing, it's just no use because this is how the industry works. Your loss is in the next person's best interest. Okay? Alright, so alright, now let's move on forward. Now, we're all aware of money management techniques, which is like, okay, well, let me see if I can get my notepad out here. Okay, we're all aware of the money management techniques, which is simply like this. Well, whatever your account balance is, never trade more than 2%. Okay? Let's say your account balance is $500,000. Okay? You have that kind of money sitting in your forex account. 2% is how much? 10,000? Okay. 10,000 US dollars is your 2% of $500,000. That means do not risk more than 10,000 US dollars per trade. Let me ask you this. Do you think that person who has $500,000 in his account, he goes and he spends $10,000 on an average day? No. So your risk should be very closely correlated to your lifestyle. Numbers will be numbers no matter what. There's always going to be numbers, there's always going to be rules, but what does it mean to you? I can sit here and give you definition after definition, and you're going to be like, okay, A plus B is equal to C, and stuff like that. I can give you definition after definition, but that has nothing to do with anything if it doesn't make sense to you. So, educationally speaking, they're saying 2% is the ideal way to approach trading. But your risk needs to be correlated to your lifestyle. Here's why I say this. Because, for example, if you're trading, right, and you have $500,000 of an account, but on an average day you spend no more than $200, you simply cannot trade risking more than $200 to $300 in a single trade, because you're not used to seeing numbers fluctuate above or below that. Okay? If you spend an easily $200 a day or $100 a day, whatever it may be, it won't bother you if you lose 100. Okay? If I say you lost $1,000 today, to some people it's going to be like, oh man. And to some it may be like, okay, I'll deal with it. If I say you lost $10, everyone in the room is going to be like, okay, big deal. It's like McDonald's. Because that amount has a lesser psychological impact to them. Okay? So make sure your risk is very correlated, very closely to your lifestyle. What is a number that you're okay seeing on your screen move up and down? That has a big impact when it comes to trading as well. So I know the books tell you 2%, and maybe the 2% just might be too high for you. Okay? Or it might be too low. If you have an account that's like, for example, $1,000 account, 2%, you're going into micro lots. That's probably the best way, because then you're not feeling the numbers. It's not affecting you. All you need to do is pick up the right pattern in trading, and then you scale it from there. Okay? All right. Next thing. There is a cycle of the traders. When every trader begins, there's a cycle. You start off as, okay, when you first start off, you do quite well. In fact, most people do quite well when they're like just getting into Forex, because they don't know crap about Forex. Okay? They're just starting off, they're just looking at the markets, they're like, looks like it's going down. Okay, I'm going to sell. Or it looks like it's going up, I'm going to buy. They look at the market as very pure. Okay? All they look at it is sell and buy. They just flow with the market. Okay? And they do quite well. Okay? Then comes the greed. And at this point, disaster strikes in. Okay? You do too well either on your demo or on your live account, and then slowly you're like, okay, I got this. This is easy, I can do this. You open up a live account, fund that account, and greed kicks in, disaster. Okay? Then you enter the next level. When you're finding something, you're on this lookout, you suddenly become Indiana Jones for forex. You're looking for something. You know, you're on this constant look for a strategy, a system, an auto trading method, a guru, a mentor, signal service. You're literally looking for something. You will not stop looking. You're going insane. You're trying to find something. Where? Because you cannot simply explain what happened. You need something to tell you, aha, that's what it was. Okay? So you keep looking for something, right? And then it comes to a point where when you find something, you put your feet wet again, and you have more losses occurring. Okay? And at this point, you're pulling out your hair saying that I just have serious bad luck in forex. This is not just you. This is like 95% of the people, or 98%. I have that problem still sometimes. I'm like, I can't believe it. This is like horrible. Okay? You get more losses, but this time it's a little bit slower because you know a little thing or two about money management, so you're not like using 10,000 to 1 leverage. You're simply using a smaller lot size. So but your losses are still there. You know, out of 10 trades, you're still losing 8 of the trades. Okay? So the next stage after that, you go back to the basics, and you start to win. Okay? You come back to the basics after all of this stuff, and you start to win, but you win very, very slow because all of this up here has caused this massive fear in you where you're unable to scale it. Okay? And at this point, what happens with most people at this point, even sometimes some people won't even win. What they'll do is when they're winning, they'll cap it. They're like, okay, all right, 20 pips. Okay, 20 pips is 20 pips is better than a loss. That's how they handle themselves, and then they close the trade. But when it's a loss, they're like, oh, maybe I put my stop too close. Let me move it. Oh, maybe that's too close. Let me move it. And then suddenly you have a 100 pip loss. Then your wins are like 20 pips, 25 pips. Okay? It suddenly moves 30 pips, and you're like, this is, you know, it's golden. I'm gonna take it. So that's what happens. You know, you start limiting yourself because you're so scared at this point. You're afraid that your profits are gonna die out, and when your losses are running, you're afraid that you did something wrong. You don't trust yourself, so that's why you keep moving your stops. Okay? All right. So. And then the final stage comes in where we're at your basics with your money management. Okay? And at this point, when you're starting to win some money, this is where you reach, where you're in the basics, and you're starting to win some money. And you understand the market. Remember, it's not that you found the golden cup or, you know, your holy grail. It's simply now you understand what the market's doing. In fact, since all of you guys are here today, let me see how many people are here. Let's take a look at this. We have 44 people in here. Okay. What I'm going to do is I'm going to take a moment and stop preaching, and I'm going to show you something really cool. Okay? A little help that will help you understand the market. And then you guys can love me forever if you want. Okay, let me show you something. Did you know markets flow in swings? Okay, give me a second here, guys. One moment. Yes? Can I just give you the cash? Can you give it to me? All right. Sorry about that. Okay. Okay, so, alright, so we know market flows in swings. Did you know that swings that comes into the market is basically 2.5 or 3 swings? And then the trend needs to end or it needs to refresh. Who knows this information? Okay? You'll barely see anybody knowing this information. This is the very basics of understanding what the forex does. Everyone's too busy looking for, okay, should I buy here? Should I buy now? Should I sell now? You should see people who come to my conference room for a trial or something, and all they do is ask me, what about now? Should I buy now? Should I sell now? It's like, wait a minute. Don't you want to learn first? What's going on? Okay, so you take a look at this. Markets are moving upwards. This is your first swing. Retraces. This is your second swing. Retraces. The third swing doesn't even make it higher than this. It's 2 and a test. And then it has to go sideways before the market can refresh itself. Now, next piece of information. Each swing gets weaker as we go. First swings are the strongest. Second swings are slightly weaker. And third swings are even weaker because they're usually going to be a test or they're going to be weaker than the second swing. Now, if I just tell you this information just by itself and you have a buy right around here, can you expect a home run on this? You won't, right? You simply cannot sit there and be like, I'm going to hit a home run. Because you simply can't. You understand the market at this point. So whatever your trading system may be, if you're looking to buy at this area, it's just you know that there's not much movements. Okay? This is a 118 pip move on the second swing. The third swing is simply 55 pips. Okay, so you know that you're limited depending on where you're entering the market. Now, next thing. You want to always know, are you buying because you see something that says buy, or does it have logical sense to it? If you buy or you sell or anything like that. Okay, look at this upswing here. Looks really nice, right? Okay, it's all green candles, really nice here. Anyone who's practically buying in this area is basically sucker buying. Why? It's because you need to understand the bigger picture. What is the bigger picture? Someone on a higher time frame is just waiting to hit this in a sell. You're buying in the face of sellers, big sellers. Okay? So if you don't have your understanding between time frame to time frame, you're going to get hit. Exactly, counter trend almost. You're going to get hit. You need to stay on top of what is going on. Okay? Forex is not just about, okay, well, let me put a line here. And then I want this line to be touched in the future, and that's where I'm going to sell. If it were that easy, everybody would be making money. And then I'll just put my stops on top, and then, what are you going to know? 95% of the people will win, only 2%, 5% will lose. Okay? It's not that simple. Okay? It takes a lot of hard work to know all this stuff. All right. Take a look at this. Market swings here. Goes down, halts. Goes down, halts. Goes down, done. Moves and swings. Moves and swings. Okay? Now, when you look at this from the higher time frame, well, You see, well, I have a low, and then that low just got crushed. What happened? Everything that was in a buy, they gave it all back to the sellers. The sellers overpowered it on the higher time frame. So if you're interested in buying somewhere here, forget it, chump. You're going to lose. Okay? So understanding this concept of the flow of the market helps you with whatever my strategy is telling me to do. Okay? First, understand what the market's telling me. Okay, just read the market. Simply read the charts. What is the chart telling me? It's going up. The sellers overruled the buyers. There's so much strength to the downside. Why in the world would I be looking to buy? Okay? And this happens all the time. You know why people are interested in buying? Because right at this moment, the bigger players are just pushing the market so hard with these big candles that at this point, when they see a big candle, everyone's like, oh my God, the market's going long, buy, 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 buy. You know, they click that buy button like forever. And then a crash takes them all out. Takes them all down. Any stops available, whether it may be from here or there, everything gets taken out. Okay? So, hence the topic, hunting your stops is in my best interest. Okay? And hunting your stops is basically knowing that the majority of the market simply does not feel the strength of where the markets are headed. Okay? This one is, oh, sorry, wrong line, is a 2 flow down. Okay? This is nothing but a consolidation. Yeah? It's just a 2 flow down. Now, I'm not saying this is, draw your consolidations and then you wait for the breakout. No. That what happens, that becomes patterns. That's nothing but patterns. You want to avoid stuff like that. Okay, you want to avoid stuff like patterns and locations. Like, okay, so this was my breakout. So once it breaks out, I want the market to come back somewhere in the future and fill me in over here. It's a location-based trading. Location-based trading won't work. Okay, if you're just waiting for something like that, and the moment it touches that, I'm going to hit sell. No, what if the market doesn't want to go there or sell from there? Okay, what tells you the market will go there? What if at that point, when the market reaches there, it's only on its first leg up, like this. It's on its first leg up. That means it's going to go down a little bit, and then it's going to do its second leg up. Yeah, it did go down. It did go down, but did that do you any good? No. Okay? Because what happens, once it goes down a little bit, everyone's expecting a home run. It doesn't go down enough. Their stops are above here. Okay? Doesn't go down enough. Their stops are above here. Suddenly it starts to go back up. If it shoots up, okay, they're already taken out. If it doesn't shoot up, because there are bigger players sitting here waiting to hit that thing into a buy. If it doesn't shoot up and it goes up slowly, you're going to end up closing at 5 pips, 2 pips. 10 pips at most, let's take whatever we've got. And then it fuels this to go higher because now there's less and less sellers. Okay? Otherwise, you keep moving your stop. That's the best thing you can do. Just keep moving your stop as high as you want. And you would never know how far I'm moving my stop because this thing's going to keep going. It's the understanding that you know that the market moves in this type of motion will tell you that even if I move my stops, I'm going to be hunted. Okay? So it's the understanding of the market that makes a big difference. It's not a strategy. Okay? I have tons of strategies. If you love strategies, go to my website, urbanforex.com. We have tons of them. Okay? Let me see your questions. What was that? Sorry, the market has to consume liquidity, right? Not really. You don't have to worry about liquidity. And as speculators, don't worry about liquidity. If your broker's not filling you in, change your broker. Simple as that. Okay, there's tons of liquidity in the market, especially in the forex market. Not to worry at all. If you're not getting filled, move it. Okay, so yeah. So you can sit here and blame the brokers for your stops being hunted, but that's absolutely fine. It's what happens, right? If you know the market moves in a particular swing, and you place your stops in an orderly fashion, you're not going to be hunted. You're simply not going to be hunted. But if you are selling somewhere here, and you have your stop somewhere up here, maybe before this candle that goes up, it might spike up a little bit and take you out. The smaller time frame you go on to, the more vulnerable you're becoming to stop hunting. Yeah, so if you're selling at an area like this, and you have your stop slightly above it, you're going to get spikes to take you out. And later, the chart might even go up and take you out regardless. But the smaller the time frame you go into, you're getting more and more vulnerable to the prices moving. Remember, if I am a broker and I have 50 different feeds I'm getting, when I say feeds, I'm talking about prices, because I don't make up the prices. The prices come in from the banks, right? Now, I can tell you I am an ECN broker and all that nonsense, and I can simply say that, okay, you have your stop at 1.2505. Let me choose a broker that is showing me a price of 1.52506. So I can spike up and take you out. Okay, I'm ECN. I'm not interfering. I'm not changing the prices on my brokerage platform anymore. But I never said anything. I cannot choose which bank I want to give you guys to fill in your rates. So this stuff will happen. Okay, this stuff is going to happen. All you need to do is always focus that I need to just understand the flow of the market and just be okay. Avoid smaller time frames. Go on to higher time frame. If news bothers you, go on to even higher time frame, 4 hours or above, and then news all gone. No headaches at all. Okay? All right. So, you guys want to look at the... yeah, I was going to go to current markets, but we don't have enough time for the current markets. So, let's go over some issues here. So, when it comes to your risk to reward, should you be risking 2% per trade? Okay? Based on what I gave you guys my opinion today, what should be the ideal way to put your risk? Correct, unless it's normal cash flow. It's whatever you're comfortable with. If you're not comfortable with it, it doesn't matter what the rules say. It's not going to work for you. Okay? As per your lifestyle. Absolutely, absolutely. Which higher time frame for bigger picture? I usually go for the 4 hours and up. Okay, 1 hour is fun for me. I really like 1 hour. 4 hours gives me the bigger picture. So I'm leaning towards 4 hours and then using 1 hour to get in for an entry. Okay, so yeah. Next thing, market moves in swings. How many swings? $2.5 to 3, very good. Okay, it's 2 and a test to 3. Good. Take a look at this. Got a swing. 1 comes down, retraces. 2 lasts up, comes down. Now, how it comes down, that's important. Okay, we can be thinking that, okay, it's going to make a third swing. Well, all I know is this is a low, This is a low. Based on these lows, I know the markets are going higher, but what happened recently? These buyers gave everything back to these sellers. These sellers are overruling. So now we have this high here, okay? We have our lower low that's just been created, okay? Have this lower low. We have our high. If your lower low gets preceded by a lower high, your downward channel confirms that we're now in a downward movement. So, if the markets are going down, remember, buying somewhere close to here is death. Okay? Buying much later, close to here, is still death. It doesn't mean that prices are lower and you have more space to move. Okay? It's the fact that if you're able to buy somewhere here and it goes up and it's unable to breach, you still have time to cancel or scratch this trade and still come out in a profit or even break even. Why even take a loss? I don't understand. Okay? If you have the view of the markets, there should be no issues whatsoever when it comes to your trading. Okay? Because once you see it retraces a certain area, like, okay, I'm going to hit a buy, but can I hit a buy? Okay, do I have space? That's what matters. Okay? All right. Let's see here. I see many type of this type of context, and it can go higher than the previous high from there. Not really. Now take a look at this. I'm gonna show you guys one thing. Here's your high, right? Right now, going upwards. I can tell you it's not gonna do this. It will not do this. How do I know that? Because it's its first leg up. This is its first leg up. It's not gonna just collapse like that. Take a look at this on the 1 hour chart. One leg up. Wait, this would be your one leg. Down. It's up to your second leg. Once this is done, you're looking for a turnaround. Okay, and as it comes down, same thing. 3 legs. It's going to do the same thing, but you won't suddenly see the markets will go like this either. The market flows in an orderly fashion. There's no such thing as the markets going above higher highs or below lower lows in one singular leg. Okay? Take your moment, take a time whenever you get a chance, go through your charts. It will not break through anything with a singular leg. And that leg will not judge your future in forex. Okay? Yeah, and I referred to a fact that the new low, it's not mandatory. Yeah. Things will develop as they go. You know, the most important thing you need to see is are my buyers are they in control or are my sellers in control? Well, based on what I see, the sellers are in control, right? They're overpowering my buyers. This is why we're suddenly seeing lower highs. Okay? But up until this point, before this even showed up, when we had lower highs, we had one high here, and then we had one lower high. We didn't have a lower low yet. We are still not in a downtrend yet. The moment we had our lower low was here. That's when it confirms, aha, we are now in a downward movement. And once the market retraces, if your system or strategy or whatever it may be that you're doing, or your guru or mentor or signal service says sell here, you can be like, makes sense, I'll do that. Sure, why not? But if it says buy here, you can close that book, cancel your service, walk away. Okay? Alright guys, so As a small promotion, I am giving a 40% discount to everyone here as an FXStreet members. If you guys do want to join my conference room over at forexwatchers.com, you can simply email us. That's info@forexwatchers.com. Just mention that you were part of the FXStreet webinar on today's date, and they'll get you in for a 40% discount. We do this stuff every single day. We watch the markets live together, and we have over 8 months worth of training videos that you can watch and replay and replay and replay. So thank you so much for attending, guys. The time is up. We're going to have to close down the webinar. I will see you guys in probably the next webinars that are coming up next month. I will bring you guys more information. Hope it was all educational and useful to you guys. Stay safe in the market and understand the flow. Take care, guys. Thank you, FXStreet, for having us and having me. Sorry.